Good morning, YouTube. Today, I basically just wanted to cover for you real quickly what type of investment real estate is and how it fits in your portfolio of investments. And so let's get into that real quick. So here's the types of investments that we talked about. We have a job, like we talked about. This takes time and creates an income, and that income, if you don't spend it all, can be a source of capital for investment. We have a high risk, low return. Bad investment. Real estate could be this. You buy. A lot of people say, "Hey, is real estate a good investment?" At the right price, it's a good investment. At the wrong price, it's a bad investment. So, buy the wrong house. It's got a lot of issues at the wrong price. Estimate the rent wrong. Fix it up wrong. Close wrong. You've got a high risk, low return investment. Those are easy to get. Okay, so real estate can be that. Consistent rate of return, maybe 6% compared to treasuries. Real estate can definitely be this. Now, let's say you have a house, and this recent one I'm looking at was listed at 250 something. It was 249. I'm closing at 225, which creates money in there for the fix up that's needed and a buffer for a moat based on what I know how to fix, what I know how to do. And so that house is not asymmetric risk reward natively. It's not a Lollapalooza effect, at least at this point. So it's just kind of a 5.99% return. And the rate on a loan's higher than that, but it works out that this makes sense for me to do. But it's definitely this type of investment is this current one. A learning investment, your first one, your first house is definitely going to be a learning investment, whether it's a house you live in or a rental. Both of them you're going to learn things from. And, you have to view it that way. It's a higher risk investment, so you definitely need a larger moat. Asymmetric risk reward. The third house I bought I bought at an auction. It was a double wide trailer. And even though it cost me, like $20,000 and, $40,000 to fix it up, the rent was like $800 a month. So definitely asymmetric risk reward investment on that one. Sometimes Lollapalooza effect comes in. And this happened when I bought houses in 2019. The 2020 inflation happened. And between 2019 and now, the houses have doubled in value. I did not plan on that. I planned on this one, an asymmetric risk reward, where maybe the houses were going to be a negative cash flow of $200 a month, based on the price. I was going to have a buffer in the houses, and definitely make over this return was what I planned on. But based on the real estate market, it kind of turned into this. Speculation. Speculation is where you buy something hoping that someone will buy it from you later for a higher price, and you can definitely do that in real estate. Market investment, dollar cost averaging. You can do this through some kind of real estate funds. Now, what I will tell you is that my best gains, this one you can avoid just by insisting that you are paid for an investment. Meaning, if you're moving something, $200,000 in money to a $200,000 house, you didn't actually get paid. And so I don't do that. If I'm gonna move into a $200,000 house, maybe it's for $175,000, because those risks have costs, and I'm gonna get paid for that work I do. So this one I've done definitely, and this is good based on timing. So based on what you need, I've done a 1031 exchange from one house to another with this, and so I've done this, I'm going to say, probably twice. This one, at least twice, so probably two of these. Learning to invest, definitely done it once, maybe twice if you include, my house. Asymmetric risk reward investments, I would say I had about 6 of these where I felt like going in, the risk of the investment was lower for me than someone else, and the reward was higher for me. So based on some skill sets or relationships I had, I felt like it was a lower risk, higher reward investment for me. Lollapalooza effect, I would say I've done this about 5 times, where it just happened to be that the situation crossed, and that amplified the returns. And I think in this situation, I think I made about 900% in a year on this investment. Speculation, I try not to do this. I try not to buy something thinking someone's going to buy it for me more later. I try to buy it based on what it's doing for me as I hold it. And so I don't generally do this. And dollar cost average, I don't do this either, because, I mean, you can do this with some funds online and things, but the problem with this is it removes the possibility of Lollapalooza. It removes your asymmetric risk reward investment because you're kind of buying at market, and it takes all the learning out of the situation. So I really tend to stick in this area and base what I do kind of on what I need at that particular time, and specifically not basing it on what someone else is looking for. And when someone comes to me and says, hey, is real estate a good investment? I mean, they assume that it is. I say, well, it depends on what you're looking for. If you're looking for this, yeah, it can be. If you're looking for this, you definitely, anybody can do this. And I've seen a lot of people get into real estate at a high risk, low return investment. And some of them eventually turn it around also, and go through and end up making it into a learning opportunity. And they get the next one, and they do better, and the next one, and pretty soon they're into 10, and in the last 8 maybe they did a good job on an increasing basis. And most of the time for me, I'm kind of looking for this one right here. I'm looking for something that's a little cheaper. I can bring some kind of value into it, and the risk is lower for me than someone else. And so that makes it a better investment for me in particular. Hope this helps you, and helps give you perspective on real estate and the types of investment real estate can be, where it can fit into your portfolio based on what it is, and how you move forward into that type of investment. I'll talk to you guys later. Bye.